Hello, my name is Sally Gimmon, and I want to go over about the Spendthrift Trust. The reason I do this is because so few people know about this. I want to teach you how to save on federal taxes. Right now, the Spendthrift Trust comes from England, back when King Henry VIII started the Church of England because he got in trouble for chopping off his wives' necks. He started the Church of England, and then he went to go tax the lords and ladies, and then they went further back into history to the Magna Carta. So this is very old law. It's contract law that comes from England. The law firm I work on behalf of has a trust that is turning 350 years old in 2023. So before when we were a colony, this came over to the United States. Now, 97% of the trusts every single year that are sold is what my mom and dad had, and what Susie Orman talks about on TV. It's called a family trust. The only thing it's designed to do is avoid going through probate when someone dies and then it dissolves. It's not a bad thing, but it does not save you federal taxes. It does not keep your information private, like an LLC or S Corp or C Corp doesn't do that either. And it does not keep you from paying any judgments if you get sued. This is not your mom and dad's trust. This is the trust of the Rockefellers, the Kennedys, the DuPonts, and all the rich families. Most people don't realize that the U.S. Tax Code only came into existence in 1913. It was supposed to be a 6-year temporary tax because we were going into World War I. Well, it's been more than 100 years, and it's grown and grown and grown. It's an odd statistic for you. My undergrad was English literature, love Shakespeare. Think of all Shakespeare's works. Romeo and Juliet, As You Like It, Midsummer Night's Dream. Line them all up, back to back, and you're going to be about this big. The U.S. tax code is 10 times the size of Shakespeare's work. Trust me, Shakespeare's a lot more interesting to read than the tax code. So when they were putting the tax code into existence in 1913, the rich families, again, the Kennedys, the DuPonts, the Rockefellers, and others, purposely put this in 643B. This is way up here, high in the tax code, and I'm not making fun of accountants or CPAs because I'm dyslexic and I transpose numbers, but they work at about the 300, 400 level because 97% of all Americans file 1040 tax return in the 300, 400 level. When you have the Spendthrift Trust, you are going to file a 1041 tax return. Only very special occasions can you file the 1041 tax return. Now, there's going to be 4 trusts I'm going to talk about very quickly here, but you can find out more information. My website is www.thetrustisyou.com. I have a podcast out there. It's called Stop Paying Capital Gains Now with an exclamation mark. I got 27 episodes out there. I'm going to start it up again once school gets back into session. But I want people to know this because if I can save money on taxes, I want to teach as many other people how to do this too. So let's get this started. The business trust. This is for anyone who is a 1099 income earner. So if you're a real estate agent, if you are an affiliate marketer, if you have, if you are a salesman or car salesman, if you are have an online store or a pizzeria. So I'm going to give you an actual example right now of a real estate agent. She's here in North Carolina. She makes about $70,000 a year. She's got 4 houses up right now, so she's going to make more than that this year. She's at 22%, and she's filing single because she's divorced. So her annual taxes would be $10,707.50. We're going to save her year after year after year, generation after generation, $7,495.25. That's a lot of money. Congratulations to her. Let me see, who else do I have here? I should have had this all done. Oh, here's an interesting one. This is a married couple. They're a husband and wife. One's an affiliate marketer. The other one is a coach. They're making about $200,000 a year. Congratulations to them. They filed jointly because they're married. They're at 24%. And their taxes, when you figure out all the numbers, if you can see all my cheat sheets, there's all a bunch of numbers. Their taxes for the year are going to be $34,800. With the Spendthrift Trust, we're going to save them at least $24,360 on their federal taxes. That's a lot of money. Congratulations to them. So that's the business trust. Then there's the beneficial trust. I don't care if you're a passive investor, a real estate investor, crypto miner, if you're doing things in the stock market, a day trader, options trading, if you are got rental income, short-term rental, Airbnb, if you got 20 doors, if you're doing multifamily, or if you have royalties. The beneficial spendthrift trust is going to save you the following taxes year after year, decade after decade, generation after generation. You will no longer pay short-term or long-term capital gains. I personally, the reason I named my podcast Stop Paying Capital Gains Now is because the way I found out about this trust is back in July of 2020, I took down the deal of the week. It was a bank-owned reverse mortgage, 4-bedroom, 1-bath house in Rocky Mount, North Carolina. I paid $20,000 for the house, and it was going to go to auction for $50,000. Easy peasy. I've done this before. But remember, July 2020 is the middle of COVID. We had no idea how long this would take. Well, it took 13 months, and I got curious because I knew at the time I was paying 24% tax rate. There's 7 different layers, between 10% to 37%, whatever your tax rate is. I was at 24%. So I started researching this. In my national real estate group, Garrett Gunderson is an instructor. He wrote a book called What the Rockefellers Do. It's now called What the Billionaires Do, but I have a paperback copy of What the Rockefellers Do. It is about the Rockefellers Spendthrift Trust. They call it the office. It is 7 generations old, and it has almost 400 people, all under the same EIN. That's Employee Identification Number. They each have their own individual bank accounts. They don't commingle their money, but this is how big the office is. I hear a rumor they have at least 18 CPAs working for them in the office. You know, most of us just do our taxes ourselves or hire somebody here at Jackson or something like that. So the Rockefellers have an entire team working for them to save them taxes. So with the beneficial spendthrift trust, the short-term capital gains, I waited 13 months. So I got it in July of 2020. I went to auction August 28th, 2021, started at $50,000, so I was going to make that $30,000 spread, and went all the way up to over $64,000. Yay, Sally! I made $44,000 on that one transaction. Even better, yay, Sally! I saved $10,550 on that one transaction. I've so far have saved quite a bit in capital gains. I also, interest income, I have notes where I'm the mortgage on the house, people paying me their mortgage, that if you do the BRRRR strategy, if you are doing passive investing, or if you're a forex investor. Forex investors, listen up. You get taxed twice, interest income and capital gains. Yikes! That's why you need the Spendthrift Trust. Long-term capital gains, true story. I just helped the gentleman. Unfortunately, he has bursitis of the knees, and he's selling his HVAC company. So I am not the accountant, so I don't know if he's going to be selling it at 15%, or if he's going to be paying 15% in capital gains or 20% in capital gains. He just sold it. He won't be paying these until April 15th of 2024. At 15%, it was $255,000, or at 20%, it'd be $340,000. His comment to me was like, who cares? I'm saving a ton of money. Give me the trust. His business broker bought that to me, so the business broker got a $600 referral fee. It was an HVAC company. He also had the client who was buying the 15 trucks and the whole company from the gentleman who was retiring. The business broker told the gentleman who was buying the business, hey, you need to know about the business spendthrift trust so you can save 1099 income. So that business broker made $1,200 on one transaction. Congratulations to him. He's brought me 2 more clients. I love it. So that's short-term and long-term capital gains. We talked about interest income because I got confused. Dividend income. If you're in the stock market, you're going to be paying between 10% to 37%, depending on your tax bracket, on all your profits. If you're doing options trading, listen up, options traders, you're getting taxed a little bit differently. If it's less than a year, you're taxed at 40% of your profits. If it's more than a year, it's 60% of your profits. You need this Spendthrift Trust. Rental income. It could be short-term like Airbnb, traveling nurses or students, or it could be long-term rentals. Maybe you got 10 doors, 20 doors, 30 doors, or maybe you're in multifamily. Yes, you can take depreciation. You can do the same thing with the trust. But with this trust, besides saving federal taxes, you're going to keep your information 100% private. Your LLC, S Corps, and C Corps don't do it. And then the third most important thing, you're not going to be, if you get sued, you're not going to pay any judgments. They're going to sue the individual, but everything's going to be in the trust. The old adage, own nothing, control everything. So they're going to sue you, the individual, who is worth nothing, and that lawsuit will go away. So if your renter's dog gets loose and bites somebody, they're not going to come after the renter. They're going to come after the owner of the place, and you can save that money. Now, those are my two main trusts. Another trust I deal with is a charitable trust. This is a really neat thing. I just started my charitable trust, and what's going to happen is I'm working with a gentleman who gets the Google ad grant. You're going to get $10,000 a month or $120,000 a year in Google ads. You either use it or lose it, and they'll make sure that you get this money and that you can start advertising your nonprofit. So I just relaunched my nonprofit, learnwithsallymarie.com. Just to let you know, gift giving is in the tax code. And if you want to Google this, Google Dolly Parton and the Christmas fires of 2016. Back in 2016 at Christmas, there were really bad forest fires in Tennessee, and she was gifting anyone who lost their home $15,000. She was using IRS tax tip 2001-31. So gift giving is covered tax-free in the United States. All you have to do is one $10 donation, one $10 gift, and 3 recruits, and you'll make over $7,500 on the first board. That's at www.learnwithsallymarie. That's my charitable trust. It is a I want to get the numbers correct. It is a 501c3. 501c3. That's the charitable trust. And then the last trust I want to talk about is for people who are over 65. People don't know about this, but if you're making too much money or doing too much, you're going to be in charge. It's called IRMA. That is called, so let me tell you, I'm going to look at my notes so I can give you the right information. IRMA is Income Related Monthly Adjustable Amount. So if you make more than $91,000 when you are on Medicare, you pay for Part B, Social Security. Part B is your doctors and your tests. Right now, the average American on Social Security is paying about $166 a month from their Social Security check for Part B. I can't change that. That's what happens. Well, if you make more than $91,000, you'll pay higher. And there's 5 levels. So there's $91,000, $114,000, $142,000. And if you make more than $142,000 in a year, you're going to start paying the federal government to have Part B. Now, what is included in IRMA? This happens every October and November. This October, the IRS is going to be looking at 2021 1040 tax returns for people on Social Security. They're going to be looking at Social Security, your Social Security income, your wages, your 401k withdrawals, your IRA withdrawals, pensions, capital gains, interest income, dividend income, rental income, and royalties. If you make too much money, they're going to increase how much you pay for Part B, or you have to pay the federal government. Well, if you have this special trust, it is a 1041 tax return. The IRS does not check that, and it doesn't matter how much money you make. So these are the 4 different trusts that are out there. I know you're asking, well, how much are they? Here's the skinny on that. One trust is $20,500, comes with the entire team. We'll get you the EIN paperwork. You'll open up a new bank account. You're going to have a team help you get your vehicles registered correctly. You're not going to put your personal house completely in the trust until you plan to sell it, but it'll pay for the mortgage, it'll pay for the electricity, it'll pay for the gas, the garbage pickup, things like that. If you want 2 trusts, now or in the future, it would be $37,000. If you decide to get the charitable trust, it gets even less than that. Again, I would love for you to set an appointment with me so we can have a personal conversation, but I do a live every Monday night, 8 p.m. East Coast time. I call it my live Q&A. So if you go out to www.thetrustisyou.com/Q&A, I go over all the slides, and then I open it up for questions. I want to help as many people as possible save as much money as possible. The first page of the IRS Tax Code says it's up to each individual to know how to save taxes. The rich know this. I don't want to be rude, but there is a safety net for the poor. The rich know this, and it's the middle class that's getting squeezed. I am middle class. My dad was a military officer. My mom was a RN midwife. She stopped working when we were born, so we lived on one paycheck. I am middle class. If I can save money for my real estate, my crypto investing, and everything else, you should save money too. So it's thetrustisyou.com, and my podcast, Stop Paying Capital Gains Now. Thank you for watching me here on TikTok. I hope y'all have a wonderful weekend. And if you want to start saving taxes, please reach out to me. You can set up an appointment at thetrustisyou.com. Take care. Bye-bye.